Nigeria's extractive industry witnessed mixed investment realities in 2024. Oil and gas faced challenges, including theft, underinvestment, and infrastructure decay, while regulatory reforms under the Petroleum Industry Act aim to restore investor confidence. Solid minerals saw increased exploration activity, spurred by incentives and the formalization of artisanal operations. However, investor concerns over governance and logistical bottlenecks persisted. Looking to 2025, we will be examining the government's focus on expanding solid mineral export, leveraging advanced mining technologies, and ensuring operational transparency. How will this redefine the sector's potential? Well, joining me for more on this is George Etomi, Principal Partner, Etomi Partners. Thank you so much for joining me today.
My pleasure, and Happy New Year.
Happy New Year to you too. Well, I think I'd like us to begin by dividing the extractive industry into, oil and gas and then solid minerals or mining for ease, so we can understand when the conversation starts. So I'd like us to begin with the oil and gas sector. How would you describe it in 2024, challenges and opportunities alike?
Well, 2024 saw what I might say a little bit of stability in the oil and gas industry if you compare it to previous years. If you remember, we've been grappling with trying to increase oil production from about 1.2, 1.3 million barrels to around about 1.7. That was the target, but I think we managed to do 1.5 million barrels. So those challenges have come against the backdrop of underinvestment in the industry, and then delays, if you ask me, in the approval process for most of the divestments done by the IOCs to local producers. Happily, this regime looked at the matters expeditiously, and we now know the Mobile Sebla deal has now been consummated, and we're hoping that that would significantly boost oil production. We've also seen the Renaissance deal also approved. That would be a significant help as well.
But let me just ask you a bit about this. Talking about the Renaissance deal, there are those who are saying there are still issues that they feel were not totally looked into or addressed before that approval came to be. What's your take on that?
Well, the fact is you will always have unfinished business in the oil and gas industry. The issue is that there are so many diverse interests that are interested. But what's critical here is that Shell, that's doing the divestments, have preferred to do a deal with Renaissance. Renaissance have proved that they have the financial and technical capability, which it's what should matter to every one of us. Shell gave its own conditions, which have been met by the government. And I think we have a meeting of minds at this point. As I said, there will always be unfinished business. So as exploration begins, you're beginning to smoothen the rough edges. Even with existing concessions, you are always forever dealing with one issue or the other. You talked about regulation. The key to most of these things is how active your regulation is to ensure that operations are streamlined and allowed to meet with the expectations of the industry. Whether we look at a positive or negative effect of what oil has been to us in this country, the fact still remains that our brand of oil, the Bonny Light, is one of the most coveted, and it's not going to go away in a while, notwithstanding the global shift to cleaner sources of fuel. We've seen events that are occurring globally that could possibly actually
let me come in here. Let me come in here. I mean, still staying on oil and gas, with proven oil reserves of 37.5 billion barrels and also accounting for over 85% of exports and 50% of the government's budget. You will agree with me that this has significant implications for not just Nigeria's revenue, but also its forex generation. So looking at the year 2025, what role do you think, the sector will play? What opportunities do you see for the sector in 2025 and even challenges? Because we see that it is very important for the Nigerian economy.
It's going to be a mixed bag, and I'll tell you why. We are projecting a boost in oil production, but whether you get the foreign exchange that goes with that is a different matter. Don't forget, we now have our refineries back on stream. and it will require feedstock crude oil. So which means crude oil you would ordinarily have sold in its crude form will now be given to local manufacturers, the Dangote refinery. There are
In
other
Naira.
smaller refineries. And then, of course, we now know Port Harcourt and Warri refineries are coming on stream. You're going to commit crude to them. And whenever you commit that crude, the benefit in terms of foreign exchange you will be deprived of. But at least the upside of that is that it will go towards a more competitive domestic end product industry. And you need that because what's fueling inflation today is the astronomical rise in so many things, including fuel prices. So we hope, and we're already beginning to see, that with the rejuvenation of the refineries, fuel prices, pump prices will beginning to come down. We're beginning to see that happen. And if that happens, it will go towards a beehive to generate a beehive of economic activities. So what you might lose in terms of your foreign exchange earnings, you gain from increased domestic activities, including manufacturing. So it's a mixed bag. But overall, I am a very optimistic person. I see a positive outlook for 2025.
All right. You might also want to add to that the fact that if we're able to save, money, the monies we're supposed to use in importing refined products, that could also be another one we're saving. So at the end of the day, we're also saving dollars, right? Okay. So now many seem quite optimistic about the sector. You have also said that, especially looking at recent happenings also in the downstream sector. I would like you to speak more to the upstream sector. What trends do you think will sort of shape it in 2025? I mean, you might also want to look at the bid rounds that we just had and all of those things, and NUPRC scoring itself really high. I'd like you to tie these two together.
I'll just align myself with the NUPRC. They deserve to score themselves high, and I also score them high, because for the first time in a long time, we're beginning to see regulation match industry activities. In the past, regulation used to be a drawback. Companies apply for stuff, and it takes them ages before the regulator comes back, and by the time it's done, the projections all go whack. But today, the NUPRC, to my knowledge, actively engages participants in the oil and gas industry. They're doing their field studies, they're doing their outlook, they're doing outreaches to many of them. They have meetings to find out the challenges that they have. They've given them clear benchmarks, failing which their licenses could be revoked, and so many other things. And there is that increased confidence amongst producers, and that's really what you want in an industry. And it's not a surprise, therefore, that there's a general upward projector. But what we must continue to do is to ensure that where the PIA has fallen short, and it has fallen short because it took so long to approve it, the regulation fills that gap. And I know for certain that the NUPRC is on top of its game. And the outlook, again, for me is positive. We will see increased production. We'll get close to the 2 million barrel mark that they've set the target for, and perhaps even surpass it. There are other smaller producers that are coming on stream, and those ones are encouraged actively through the incentive measures provided by the regulator to ensure their targets are met. So again, general positive outlook. And then let me quickly add the foreign affairs side of it, because there are activities outside of this country that could also boost production. The recent events in Syria will create some degree of instability in the Middle East. We're already seeing that. And if you recall, in the last day or two, we've seen for the first time in a long time in mainland US terrorist activities. That's still under investigation. But what all that tell you is that those activities happening in mainland US are linked to the Middle East. And there would be a general concern about whether there's stability in that region. And what that means for oil prices is that they could possibly go up well above the benchmark used for our budget. And so Nigeria again could stand to benefit from that. It's an awkward way of looking at how you benefit. But
Talking
that's
about oil
reality of
prices,
it.
there are other risks to the upside, which may not be in favor of Nigeria. How about those?
Well, there will always be other risks you're looking at. We're looking at, we talked before about the shift towards alternative for oil and gas, but overall consumption, look at China, look at India, cranking up industrial activities. The thirst for oil and gas is still very high.
All right, let's move on now. Okay, I want us to move on now so we can touch on the mining sector before we close. Now, I'll just talk about two strategic events that happened. In May 2024, the federal government introduced the Nigerian Mineral Resources Decision Support System. That's like a web-based application that provides read-only access to geoscientific and geoeconomic data of Nigeria. And also in June of the same year, 2024, we heard the Minister of Solid Minerals Development, Dele Alake, announcing that the first commercial transaction from Nigerian gold bars had resulted in a substantial increase of over $5 million in Nigeria's foreign reserves asset. Now, what has been the impact of this so far, and what other trends do you think shaped that particular sector in the year?
Well, the story about the solid mineral sector in Nigeria is a very sorry one, because whilst we've all huddled around this oil and gas, we forget that we have some of the largest deposits of solid minerals, estimated at over $750 billion. And I think by 2022, 2023, all that the government got out of it was about $200 million. Well, again, we see some seriousness under the current regime, and I agree with the solid minister, Dele Alake, that web-based solutions to tracking solid mineral activities is so important to create investor confidence. Now, let's understand something. It is not as if our minerals are not being mined, but it's largely unsupervised. The areas are too vast, so they are uncovered, mostly, in fact, ungoverned, if you push me thus far. And a lot of the money generated is actually going into private pockets. The government must move with utmost speed to arrest this trend, and they should be vicious about dealing those who have over the decades been abusing us. And it's a combination of fellow Nigerians, and especially the foreign people who come in. Some even build airstrips to do that. And we know the negative effects of this, the pollution, the adverse effect on the environment among those people, and of course, the tendency for it to be a catalyst for unrest. And we've seen a large dose of that in DRC, and we're beginning to see snippets of it in Nigeria. So we must move very quickly to ensure that the solid minerals industry begins to complement what we're doing with the oil and gas industry, so that we can develop a solid foreign exchange base. And not just a solid foreign exchange base. Critically, we begin to also look at how we can have value added. Instead of always exporting these things in their raw form, begin to see how you can create industries to work on some of these things, semi-refine them, or in some cases fully refine them, so that you can also export not just the raw form of it, but also the finished form. That way, Nigeria as a country will begin to take this issue of foreign exchange for granted. But for now, there's still a lot of work to be done in the solid mineral sector.
All right, just before I let you go, in the wider scope of things, what opportunities currently exist in that particular sector, and what incentives do you think, maybe we need government incentives or whatever it is you actually think we need, so that we can boost investor interest, for commercial exploration? Just before you get to that, I was wondering, when you say airstrips, you mean we have people who practically built airstrips to cut away our mineral resources? Is that what you're saying?
Well, just go check, and you'll see that a lot is going on in the solid mineral sector. That's why I use the word ungoverned spaces. And I've actually spoken to somebody who headed a ministry some time ago, and they tell you that even when they get intelligence, by the time they get there, they pack up the activities, you don't see anybody. The whistle blowing is not very good. So there's a lot going on. And the government understands. And that's why I fully support Dina Lake. You must use technology to defeat these very unpatriotic actions of some Nigerians.
All right, the
Now,
opportunities.
to look at the outlook, like you mentioned, there's so much to be done. Look, one of the largest two states, Kogi and Nasarawa states, probably account for some of the largest deposits, but those areas need to be streamlined. Take Ajaokuta, for example. Many people don't know that Ajaokuta was perhaps the federal capital territory, even before Abuja. And it was so designed because of the anticipation of the large deposits of minerals, estimated at close to in excess of $300 billion. But all we hear about is the Ajaokuta steel plant. That's just a minute aspect of what the entire area covers. But what's stopping that from being realized is that there has been no structure around creating a legal regime to attract investors. And I think one of the priorities the government should do this year is to have a hard look at what's going on in that area. Because once you do that, investors can come in. The government can itself benefit from creating that structure that enables, like the way you do with the oil and gas, enables you allocate areas, mining mineral areas, and get your returns for it. And in some cases, go into joint ventures with people to explore those opportunities. The same is good for Nasarawa and indeed all other states.
Right.
Now, I know state governments too have a role to play here. And what we're seeing in the electricity industry should also happen in the solid minerals industries.
Okay.
We should begin to allow states to participate. Because once you give them a stake in a structured manner, they would put their resources behind that and also give you the protection that is required. It is not everything that the federal government can do. Again, there's so much going for the solid mineral sector. If we properly deal with what is currently a ragtag form of governance, I think we'll have a good story to tell 2025 and beyond.
Absolutely. I mean, we're going to be watching to see what the federal government is going to do in that regard. Okay, thank you, George Etomi, Principal Partner, George Etomi and Partners, for your time on the show today.
My pleasure.